Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking currencies, let's talk the Euro future. June Euro futures now down 11 of 14 days, down about 0.25% today, a little lower than that, about 119.63.5 and change at the close. The Euro future actually cross on the chart about 3 or 4 days ago, and the cash is fast approaching that same death cross. If you know what a death cross is, it's the cross of the 200-day simple moving average and the 50-day exponential moving average. You can put those on different time frames and do a 200-week and a 50-week. They all have this sort of connotation of being the most possible bearish moving average thing that can happen. And over time, when you study them, they're not really that great. Generally, what happens is you get a lot of selling into the actual death cross, then you get a rally back up to the actual point of the cross or the lower of the two moving averages, and that usually is a fairly big move considering how slow the 50 moves and the 200 moves even more. So we are fast approaching it, and the cash market looks pretty unavoidable at this point, but it doesn't necessarily mean the end of the world for the euro, although I am targeting somewhere down in the 117 range given the fundamentals. Now, if you look, the economy, the data in the EU today, they got some pretty big downside surprises in their data. They got some weakness that showed up in a revision of the April market composite PMI, which showed the lowest level in 15 months. That's the composite, so that's services and manufacturing, as well as missing on retail sales. So with the CPI miss that they had, the consumer price miss that they had early in the week, the data continues to be very weak, and the ECB is looking for inflation that doesn't seem to want to show up. Certainly didn't show up in the last inflation figures, and these figures that we got today are not going to help push it to where the ECB wants. So continued economic weakness, and then you add into that the dollar in the form of the dollar index is stronger again. It's obviously stronger against the euro if the euro's down, but in the form of the dollar index, the dollar continues its uptrend. Again, not a big move, but the non-farm payrolls was just enough to keep 10-year yields a little bit higher. Initially they fell, but then they recovered, went a little bit higher, keeping the Fed on their path. There's nothing in this payrolls number that would take the Fed off their rate hike path and take sort of the consistent inflation that the Fed has had, especially given that they called it symmetric, a symmetric 2% inflation target. Pretty much the dollar strength is still on target. That's going to continue to push the euro lower. This is Bob Iaccino talking euro currency futures from the CME Group trading floor in Chicago.